I think it's best to sort of describe it as a ticking time bomb at the moment, because the size of the shadow banking system, which is largely unregulated, it doesn't have the same risk management systems as normal banking, has been growing very rapidly in the last 2 or 3 years. So this is a very major risk to the Chinese economy and certainly to the banking system as well.
That's why we've seen commercial interbank lending rate, which is also a market which banks extend loans to one another, spiking in China.
What we've seen is that the central bank is becoming increasingly worried about the problems of this informal banking system. So their latest move last week was to significantly tighten credit conditions to stop money flowing into these informal channels.
But was that the right measure for the central bank to implement?
There's a lot of dangers in such drastic steps, because by closing the flow of credit to the financial system, they risk plunging the Chinese economy into a more severe downturn at a time when the economy is slowing anyway. So that's why there's great concern around Asia-Pacific financial markets and global financial markets that this slowdown will have global transmission effects.
If you were to advise the central bank, what would have been the best option?
Yeah, I think the central bank has already been taking important steps towards improving regulation of the informal banking sector, and I think that in the end is the key solution. But because that takes a lot of time, they resorted to more drastic steps. But these drastic steps create a lot of systemic risks. So I think in the end, better regulation of informal banking is the key to the solution.
What can Asian central banks do to basically protect themselves from what's happening in China?
Well, right now they're facing a double whammy from the Fed and from the PBOC. So it's a very difficult time for other Asian central banks. So I think basically at the moment they're going to have to stay in a situation of relatively easing monetary policy and making sure that liquidity conditions are adequate in their own financial systems.